Hi, everybody. Thanks so much for joining us today, and welcome to Ask the Expert series. I'm Kathryn Rose. I'm founder and CEO of wiseHER, where we provide affordable, on-demand access to world-class experts that help you go farther, faster in your business or career. Today is Funding Friday, and we have a very special guest, Allison Byers, friend, wiseHER expert, and a woman founder, to talk with us about pitching. She's raised nearly $10 million for her various startups, and her newest venture is Scroobious, a platform focused on helping underrepresented founders, like me, to get their pitch decks in shape and help them cut through the noise and get funded. Welcome, Allison. Thanks so much for joining us.
Thanks for having me.
Yeah, would you like to just tell us a little bit about yourself?
Sure. Yeah. So, thanks for the great intro. And yeah, I am the founder and CEO of Scroobious. We're a startup too. So I'm one of my own, the people that we're looking to help. I'm one of them too, just like you. And like you said, before I started Scroobious, I was co-running a startup medical device company. And when I was there, I was the one that was doing the fundraising where we did raise almost 10 million. But it was, as a lot of people watching this, I'm sure can relate, such an inefficient process, so many systemic barriers that I faced as a woman founder, and I just couldn't get past it. And then when you do the research into the amount of funding that underrepresented founders get, it is mind-blowing. And so when that
Mind-blowingly low. Yeah, absolutely.
that, yeah, I should have qualified, but
That's okay.
I think it's pretty, there's a lot of research coming out now, so at least it's more, more well known. But I just had to do something. I had to play a part. And so that's what Scroobious is. We are focused on two things. One side is founder education and tools. So helping underrepresented founders understand what exactly do you put in a pitch deck. It doesn't have to be scary, and giving the really tangible tools to be able to do that and to be able to confidently present it so that you're approaching investors with something that is speaking to them and effectively communicating the story that you have to tell. And then the other side of that is access to relevant sources of capital. So we focus on pre-seed and seed stage founders, and we're helping develop, again, a platform and tools to be able to connect with early stage investors and alternative sources of capital.
Fantastic. Well, thank you. And again, thank you for joining us. And this is such a challenging thing, I think, for me as a first-time tech startup founder. I mean, I'm not a first-time founder, but a first-time tech startup founder. And I know, from the various groups and everything, that this is always coming up all the time. And we got a lot of questions from folks beforehand. And, one of the questions that I had and that came up before is, why do I even need a pitch deck? Like, it seems very flat, right? It seems very, there's no emotion behind it. There's no nothing. And so, and a lot of women, especially in underrepresented founders, we start things to have impact, right? To have different kinds of things. So it's, why is the deck so important?
Yeah, so it's a really good question. And the pitch deck today is basically what a business plan used to be, right? So I know hopefully more people remember this that are watching this than just the two of us, but you used to write these big business plans that laid out everything that you were going to do in the company, the mechanics of it. And that's what you would send to people or you print out and give to people. No one really does it anymore, right? The pitch deck has replaced it. But you still have to have a way to communicate to potential funders what your business is, both from a narrative standpoint, the story behind it, but also the mechanics of your company and how you're thinking about your business model, what your market size is, if you have traction. All those things have to be documented somehow. But we've evolved in the way that we communicate, and the tools like these presentation, software programs help us communicate things in a way that's easier for people to receive. So visual information and graphics that you can put in a deck can be really helpful. But the flip side of that is, you're right, if you're now sending a PDF around, you can't put anything about yourself in there. It's not personal. You can't provide that color. You can't provide that character. And at the early stage, that is just as important, if not more, than the actual technology itself, because any sophisticated investor knows you're going to end up pivoting and it's not going to end up how you started. And so I really recommend, whether people work with me or not, doing a pitch video as well.
Okay.
Again, there's tools that are free, they make it easy, but make yourself a person at that first interaction rather than sending just that static flat PDF. Get yourself in front of somebody and get to be a human and not just that piece of paper.
Yeah, I think that's really important to especially setting yourself apart at the earliest stages because you don't have traction when you first start out, right? And a lot of it is that angel level where you're getting them to believe in you. So that's really important to do. In terms of the pitch deck, there are so many different formulas and different kinds of things. You see some that said you should have no more than 10 slides. Some say don't make sure whatever slides, how many ever there are, they have to have these specific slides in there. So talk a little bit about, what are the specific elements that have to go in a pitch deck?
Yeah, so there's a bunch of different frameworks out there. We have our own framework with kind of the 10 core building blocks of a deck. There is no one size fits all, right? Part of what's frustrating is there's no standard format for a pitch, and you're going to get totally conflicting advice and feedback from different people and different investors that you talk to. But really the essence of, especially a first pitch, or you're trying to get a first meeting, is educating the investor on the opportunity that you're presenting to them. So it has to be compelling and it has to be informative, and you have to keep your goal in mind, right? So at that first one, if you're just sending it out trying to get a first meeting, your goal is get a first meeting. So
Okay.
Put the material in there that's going to convince someone you are worth 45 minutes of their time, right?
Okay.
If you have that 45 minutes, your goal is different, right? Your goal is get a second meeting or get into due diligence. It's
Right.
longer, it's meatier, right? So you will end up with different versions of your deck. I recommend having your core storyline and then as many backup slides as you want. Don't ever delete, just put it in the appendix and you can pull them in and out as you need them depending on the meeting and what it calls for.
Okay.
But you want to walk somebody through that education process, right?
Okay.
So the format that I like is it's on our website too if anybody wants to see the graphic. But one key element is putting in your origin story, your mission. If you're early stage, why are you doing what you are doing? It is a big deal to start a company, right? And investors know it is going to be harder than you think it's going to be, and they have to know that you're going to stick with it when it gets that hard. So you have more in it than just the opportunity for a financial gain. Personally, you're tied to it. You're not going to run away when it gets hard. Because like you said, they're giving you the capital, right? It's going to build your company, but you're the steward of their capital. So they're evaluating your decision-making, your passion, your ability to be a good steward of the money they're giving you. And then you want to walk through that process, like almost like you would with any storytelling, right? What is the problem that exists out there? What's a pain point or a huge opportunity? Who's feeling that, right? And then how are you addressing that problem? So how do you specifically solve the thing you just said was a problem that needed solving? That's a great way to start and hook somebody into why you're doing and what it is that you're doing. And then you walk through some of the mechanics after you get that interest at the top. So I always like to start it that way, right? And then you can get into things like your business model. How are you making money? Because even if you're a social enterprise, you still have to show that you know how you're going to bring in revenue. Because if you're taking an investment, they're expecting a return, right? So you have to talk about that, which leads into the market size. There has to be a big enough market. And there's more, I don't know if you want me to walk through every section, but there's kind of the key, the meat of your deck that really has to be in there.
Yeah. So the key things it sounds like is, especially at the early stages, it's, the origin story, what's the problem, the market size, why now, right? And then of course, your team and your go-to-market, like those are the biggest ones. Because a lot of founders have asked, and one of the questions that came in beforehand is, do you have to put financials in your pitch deck, like to try to get a first meeting?
Yeah, so there's different points of view here. I can tell you the majority of kind of the first pitch do not include financials, particularly if you're pre-revenue. If you're doing a later stage raise or you've been post revenue for a while and you have some history there, you can decide if it really adds to your story. But again, think about the goal. Goal is to get a first meeting.
Okay.
You can have serious interest in a business without knowing their financials at that first step. And if you're pre-revenue, it's projections, right? So what's important there, more than the actual numbers, are the assumptions that you're making. What are the levers behind those projections? What are you assuming? How are you getting there? How much market is there behind them? That's what someone really needs to understand when you're talking about financials, especially when you're pre-revenue. And that's a second conversation, right? That doesn't have to be right away. And for underrepresented founders, it's been shown that if you do include financials, investors tend to really hang on them and press you on them.
Okay.
More so, right? And you just don't need to do it right off the bat. So unless you have a need, like you really want to have them in there, I usually recommend you save them for when you get into a different conversation.
And well, thank you for that. And I also know that, you've done a lot of research around how much time and with your videos that you do, each one has like a different chapter and they can kind of skip around. What have you seen in sort of trends? Like how much time does an investor spend on these on decks? And what have you seen where would be the most important parts where you see investors immediately going to kind of click through?
Yeah, so there's a difference between the deck and the video, right? And DocSend puts out some great research about people who use their service. There are, it's limited to those who use it, obviously, so there's a little bit of bias there, but they put out some really good research on what sections and how long people are looking at things. When it comes to the video, what we're seeing is people tend to watch the majority of a video, which is really good. And we cap them at 5 minutes. That's the human attention span for watching someone talk on a screen when it's not interactive or, in this kind of a format. And yeah, we put in the markers for each of the sections. I find that people tend to watch them through and then they will go back and click on certain sections. So they do tend to go back and click on your business model and make sure that they really understand how you're making money. We also find that once they've gotten through kind of the mission, your origin story and your mission, the problem solution, if they're not interested, they'll drop off, right? That's you have to make that compelling.
So you have that first minute-ish to really make that piece compelling for them to continue to want to watch.
Exactly. They have to feel some alignment to what you're doing or to you. They have to believe that there is a real problem out there or a real opportunity that you're pursuing, and they have to understand what it is you do. That's one of the toughest things for founders. It should be the easiest, right? But it's actually tough to get down to a tangible help. Again, you have to educate the investor. What is the product or service that you are providing and to who? It has to be really clear and concise, because not only just for the pitch of the investor, but they're looking at this trying to understand if you're going to be able to sell. So can you describe what you do to a general audience? And investors are a good test of it. They're generalists. They tend not to come from the area that you come from. So you have to really explain it. And it's a pretty common misstep to assume that investors know your industry or know what you are talking about, when really they often don't, and they're not going to stop you and ask.
So what is your advice around that? Because, I've been to a million pitch competitions, it feels like, and different kinds of things. And I see people up there and, in the first 30 seconds, I'm like, I have no idea. And these are, these are general angel groups, right? So these are pretty, like you said, general investors. They're not specifically in a deep tech, say, for example, because if you're, pitching in front of a deep tech audience, you could probably safely assume they don't understand what you mean by all the acronyms and everything you're using. But if you have something that
but acronyms, I'm going to interrupt you. Don't use acronyms. Will always mean something different in different industries.
Interesting.
There's so many examples, right? MD, what do you think of?
Doctor, medical doctor.
Why not managing director? That's what an investor thinks of.
That's true. Yep. And NLP is like neural language processing, or in the old days, and now it's, natural language processing. It's different things, right?
Different. Like CRO, contract research organization. That's what it was in med device. Everyone knew that. CRO. It's not conversion rate optimization. That's very different. So don't assume, even if there is an acronym that you can't imagine another meaning for, it probably has another meaning. So
Probably meaning something else. Okay, so make sure that you don't include acronyms. But the other thing is, I was going to ask too I do see a fair amount of founders fall into this, especially again in that pre-seed area or very early seed, where you could be, asking friends and family who have absolutely no idea what your medical device does or whatever. What's your advice as to how to break down complex solutions so that you can kind of talk to the masses about them?
Yeah. So I don't care how complicated what you do is, you can always break it down to the basic elements and basic language. If
Okay.
you really feel you can't, think about a metaphor. How would you explain it? So my best tip, honestly, is go explain it to someone in elementary school or to a grandparent. I'm not even kidding. Like, make your, like, for real, don't just imagine it. Like, go find, if you can talk to my child. I do this all the time, right?
Same. I do the same thing with my kids.
I brought them in to pitch sessions. I brought my 10-year-old in and said, "Hey, tell me what this company does." It's very eye-opening. It really is, to try make yourself explain what you do to an elementary school kid or a grandparent, because you will find yourself doing that. You will search for the basic way to describe it. And then if you really want to learn, have them repeat back to you what you do. That's the most informative, because whatever they say, again, it's going to be simpler than what you said, because they're
Right.
organizing that information in their head to make it make sense to them. And you'll learn if you've made it simple enough or if it's too complex, right? And I've worked with biotech, I've worked with deep tech, I've worked with people who think that there's no, like, it's just so complicated, you can't do that, I need an industry expert. It's just not true. And how are you going to sell? How are you going to market? How are you going to do anything if you can't describe things in really basic language?
Right.
And just keep doing that, refining it. Keep talking to people who don't know what you do and ask them to repeat back what it is you do after you tell them.
That's fantastic advice. That's, because I have seen it so many times, and where there are people in the audience of the, pitch competitions are looking at each other like, what? I don't understand what he does, And then at the end of and then as we get in sort of to the meat of the pitch, you're like, oh, wait a second, this is in your head, because everybody likes to put you in a box, right? So people will say to me like, oh, you guys are like the Uber for advice. I'm like, okay, well, if that works for you, but we have a B2B strategy, so it's not really Uber for advice, right? So but people do like to put you in a box. And I think that that's very valuable feedback too. So if I'm explaining it and someone says that back to me, I'm thinking, well, I better change it up a little bit, because that's not exactly what we do, right? So it works on both sides.
Yeah, exactly.
One of the things I definitely wanted to touch on was the market size, because I know for a fact I was, been guilty of this, and I've seen it many, many times, especially in early stage founders, where I kind of call it the 1%, the 1% of the market, fallacy or whatever, where, oftentimes founders will say, well, hey, there's 100 million people who would be a great fit for this product. And if I just get 1% of them, I'll have a, $20 billion company or whatever, right? So I know that you and I've spent a lot of time on this. I wanted you to kind of tell the audience about this idea of a bottom-up market analysis and why you need to do that.
Yeah, it is so important. And you're exactly right. What you just described is called a top-down, right? So you find some statistic somewhere that your industry is X billions of dollars and you get 1%, like you said, and that's this huge opportunity, right? The problem there is it is not specific to what you actually do and what you provide. There's lots of money in there that is not relevant to your business. So it really isn't as meaningful, right? It's not the true opportunity for what you could sell. That's what a market size is, because the investor has some math to do. They have to understand, is there room to get the return I want on the investment that I make? That's what a market size is for, is that opportunity there. Because there are plenty of great businesses that don't have the market size to support, say, a venture investment. And that's fine. And then you need to look for an alternate source of capital because that math doesn't work, right? Fine, but you have to know that. And so a bottom-up market size is specific to you and your company. Important note, market size should always be in dollars. So
Okay.
don't put it in any other quantification. It should be dollars. And bottom up basically takes, we have a whole model to make this. It's really approachable. It really is. Anyone can do this. It can be taught, even if it sounds scary.
I learned. So if I can learn, anyone can learn. I'll tell you that right now. Because I remember at first I was like, I don't get it. And then when I saw the spreadsheet you gave me and then you kind of walked me through it, I was like, this is great because, as a founder too, I want to be it's real. I mean, going at early stages, it's the pie in the sky in some ways, right? But at the end of the day, like I want to have an idea too, right? Of how much realistically this business could be worth. So it was a fantastic exercise. So I'm sorry, go ahead. I just wanted to let them know that, look, I had to go through it and I had to learn it from scratch too. So.
No, but you're exactly right. It's helpful not only for your pitch for investors, but for yourself as a business owner. It's really informative. It can inform your go-to-market strategy in a big way and your pricing. So you're basically going to do it based on your customer segments. So you're going to look at how do you segment your customers? Who are you targeting? It can be as many as you want or as few as you want. It can be B2C and B2B. It can mix models. It doesn't matter. They just have to be mutually exclusive categories.
Okay.
Right? Companies can be your customers, people can be your customers, doesn't matter, right? So you're going to list them all out, put them in rows of a spreadsheet. Then you're going to do a little bit of research. This is where the secondary research comes in to see how many of those customers exist, right? Just how many of them are there? You can look at government sites. There's lots of sources to go to. You basically want to find a trusted source, a credible source to find these numbers to back them up. One of my favorite places to go that people I think don't look at enough are industry incumbents. They usually have to put their investor presentations out there publicly, and they pay for great research. So just take it, download their investor presentations, right? Use it. It's a credible source. So you're going to do your best to find out how many of those customers exist in each segment. Okay. Then you're going to multiply it by what the average annual revenue from one of those customers is to you.
Okay.
So you get a dollar value at the end, and you'll have that for each customer segment. It's just so informative just on its own, right? You can see some customer segments are far outweighing others, and you can play with your pricing, see what that does to all of those, right? And that's your TAM. People might have heard of TAM, SAM, and SOM. And again, there's way more material here, but the basic concept with the TAM is saying, you're not saying you're going to sell to all these people.
That's your total addressable market, by the way. Yeah.
Yes, I used an acronym and you defined it. But it's saying that's the opportunity that exists for people to buy what you are selling. So it is specific to you. It's saying if you had 100% market share, this is all of the opportunity that exists out there for you to make money. And that's why it's so important to do that bottom-up exercise, because it's meaningful for your business.
Okay. And then from there, it's really just breaking it down, like of that addressable, universe, how many people that you actually think you could serve, right? So let's say, that addressable universe is 100 million people, and you sell cookies, right? Like how many people could you actually physically ship cookies to, right? Maybe, I'm just using that as an example.
How many of them there are? Yeah. So you're talking about the serviceable addressable market, which is you're basically cutting into TAM, right? You're saying the total serviceable, there's always some subsegment of people within the TAM or customer, whatever you define customer, that you're just realistically not able to service. Right. So like you just said, right, there's some people you just realistically wouldn't be able to get cookies to, or wouldn't actually buy what you're selling. And this is where your assumptions come in. Use as much secondary research as you can to back up why you made this assumption. But you can just do a percentage, right? You can say, okay, 10%, I think 10% of TAM just isn't serviceable for me. So you're cutting it down, right? And then you basically keep cutting into that TAM, and it's all as long as you explain your assumptions and why how you got to your numbers, that's what's important. But that TAM is really key.
Yeah. And so at the end of the day, it breaks it down to, what you actually think that people will buy your product based upon all of those assumptions that you made. So your TAM is the big universe, and then you break it down further. So again, I think one of the things that what you opened my eyes to is that, I mean, not that I was making the 1% mistake anyway, because I already knew, I mean, I'm in sales, right? I already knew that, that didn't make sense. But what I think really opened my eyes to is the investors appreciate the fact that you did that math, that you took the time to do that math, because one, it saves them from doing it, right? And two, what it does is it shows them that you're sort of, you're real. You're here to get, funded because you've actually thought it through.
Exactly. That's my biggest piece of advice when you're putting together your pitch is, yes, you want to communicate your big vision and, be excited and all those things, but make it real, right? Show that you have done work. There is meat behind what you say. It's not just you saying things. It comes from somewhere. And then, if someone's interested in investing, they're going to want to do due diligence. So if you get to that stage and you don't have any of these things prepared, that doesn't look good at all, right? And so by going through this exercise, and you have a spreadsheet, right? You can say, hey, do you want to check out my market sizing workbook? Happy to send it to you. That looks so good, right? And it speaks to your character. Again, coming back to, you're the steward of their capital.
Yeah.
So they're evaluating you alongside your business, showing that you produced this, you did the research.
Yeah, that's fantastic. So the other thing I wanted to ask too is, we had some questions beforehand, and one of the ones that came in, and I was a little nervous about this too when I was first out there, like, how do you protect your idea? Because I think that, obviously we all think when we're starting, our idea that, there's some, protected things in there. What do you think about, oftentimes some investors won't use a doc send or something like that, where you have to log in, right? And you're just sending the PDFs. What kind of, comfort level can you have as a founder that you could just send it all out?
Yeah, so I think people sometimes get overly concerned with competition or your IP getting out there, or someone's going to copy what you're doing, right? Realistically, no one's really looking to copy what you're doing. But my personal opinion is you should be shouting about what you do to anyone who will listen, because it's really about the execution. How are you executing on your idea, right? And if you have true IP, like if you've patented something, well, you have a patent, okay? But if it's that first version of your pitch that you're just sending out, that's one reason not to include financials, right? Don't include something you wouldn't want someone you care a lot about if your competitor saw, because no investor signing an NDA before you send your first deck. They're not going to. And you don't know who they know, where it might go. And you're right, a lot of investors, I know this from my own research, won't use DocSend. They don't want you to know. They don't want to be tracked what they're looking at. And this is more on the angel investor side maybe than institutional, but a lot of them have an aversion to that. And so, yeah, don't include something you'd be upset if your competitor knew. But that doesn't mean you can't talk about what you do. You have to, and you should, and you have to believe that you're going to execute it, on your plan better than anybody else would anyway. So don't be so concerned about that. But my second big piece of advice, and it's not even advice, I'm just telling you, don't. I talk about this all the time.
Do it.
Don't include your ask if you don't know where it's going. Don't put it on a public platform. Don't tweet what your actual ask is. That is violating general solicitation regulations, right? You cannot offer securities in your company to the general public. You can't. It can cause trouble for you later. It can cause trouble for your investors. So save that unless you know you are sending it directly to someone who is accredited or to an institution or organization that is regulated, right? So if you're sending it to someone with a fund, fine. It's all fine if you're sending it to someone and you know that they're accredited, but don't just put it out there, right? There's really strict regulations. That's why even like if someone's doing a crowdfunding campaign, all they can say is, please go look at my crowdfunding campaign. They can't put any details anywhere else about it. So think about yourself the same. You can say, please ask me about my pre-seed raise, but you can't say, I'm raising 500K.
I got it. Okay. That's really, really good advice. I mean, I have a securities license. So, in the terms of compliance, it didn't surprise me, but I know we've talked about this before, but a lot of people do that, right? They'll tweet out about, hey, I've got $1 million raise, going on. And
Mhm.
really it could come back to bite you, so you have to be really careful. You can say, hey, I'm going out for my seed raise, and I'm really excited about it. If you want to learn more about it, and this is what we're doing, right? You can say
Yeah.
something like that, but you just can't put the details of the security that you're looking for,
Right,
right?
exactly, because that can be seen as
Okay.
an offer. Would you like to purchase some of this? Right.
Right.
But yeah, you
Got
can
it.
definitely say you're raising and, please ask me about it. I'm so excited. I've got investors. You can talk about all that stuff, but you can't say I'm raising X amount for, in exchange for this. Like the world is not Shark Tank. They have their own, trust me, regulations
Well,
on.
they're accredited investors too, by the way.
But there's even special regulations that protect
Interesting.
them on for the show, so that the
Okay.
people pitching to the sharks are pitching only to the sharks, not to the people watching the TV show.
Not to the general public. That's fantastic advice. So I know we have just a couple minutes left. So I wanted to just kind of get from you, if you could sum it up when you're starting, you're thinking about putting your pitch deck together, before you even put pen to paper, so to speak, what are the things that you want the folks here to remember as they're starting to embark on putting their pitch deck together, or even, or even revising the pitch deck they have?
So I think the biggest thing is remember that we're all humans. Our brains work the same way. No matter how much money you have, your brain is still a human brain. So an investor is not a different species than you are. So think about how you would like to be communicated to, or what you would be looking for when somebody's talking to you, right? You'd want the organization of the information to be easy to take in. So think about, if you were looking at your slide, does it look like it's a big jumble? Do you understand the point of why this slide is being shown to someone? If you don't, change it. Put it in a way that's easy for someone to understand what you're trying to say. And then just be authentic and confident in
Yeah.
what you're presenting. That's really one of my biggest things that, I work with underserved founders and underrepresented founders is we tend to feel very uncomfortable when we're pitching. You're asking somebody else for money. It's an uncomfortable place to be in. But remember, you're offering them an opportunity to get in on what you're doing, right? You have a good idea, you have a good story. Lucky for that other person, they get to hear you talk about it too. It's not a one-way power dynamic just because they have capital. You have the opportunity they're looking for. That's why they're talking. That's why they're sourcing,
That
right?
is such a great point, and I want to hang on that for a minute. Is that, especially, dealing, like you said, with underrepresented founders, and of course the stats and everything don't help us, right? We kind of walk in with a lack mentality where there's only 2% for me, so I better make it good, right? I better make this pitch amazing. But what you've said is, if you flip the script in a way to, I'm offering these folks the opportunity to make money by
Mhm.
working with me, then it gives you a little bit of more confidence, and it just reframes it. That's really, really important, I think.
Exactly. You have to maintain the passion and the confidence yourself about what you're doing, because you will get a ton of no's. You will get so many no's. You will get people who brush you off as like, why is this person doing this?
If they even respond to you, by the way.
You'll get tons of people that never respond to you. Fine. You have to know, look at that small percent and think that makes me an even better opportunity because I'm
Yeah.
undervalued. I
Yeah.
represent the opportunity for that investor to make outsized returns because I am undervalued. I'm giving them that chance, right? And I know what I'm doing. So have that, pump yourself up a little bit if you get just nervous in the moment. And remember, you started a company. Like that's a big deal. You
Yeah.
must feel really passionate about it, right?
Yeah.
So hold on to it and don't make yourself less powerful than you are.
That's fantastic advice. So thank you. Thank you so much, Allison. Thank you everyone out there for joining us. Thanks to folks that sent in questions. people are making comments, and I really, really appreciate your time today. If you want to get reminded of when we go live, we're going to start doing Wednesdays and Fridays. So if you want to get reminded of the lives, go to goasktheexpert.com, goasktheexpert.com, and sign up for our list. If you are a founder that identifies as a woman, please join the Women Founder community on Facebook. It's a great group of folks that we all support each other. And of course, we're on LinkedIn, Allison and I, and of course you can touch base with her on wiseHER. And I wanted to just remind you, next week is Danielle Clark. She's going to be by on Get Wise Wednesdays to talk about email marketing. So very excited about that. Thank you, everyone, for joining us today. Thank you, Allison, so much for giving your time. You've given me a ton of time. You give a lot of time to the underrepresented founder. So definitely connect with Allison Byers on Scroobious. Thanks so much, everyone, and have a great day.